Good morning, everyone. It is Friday, January 21st, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things to talk about today. One, last night, the UK released their retail sales numbers, and to say they were not pretty is not fair. They were actually downright ugly,
Hmm.
and we're seeing some action in the pound today. So we are going to take a look at the pound. Now, we've got earnings season in the US going on, and Netflix came out with their earnings. We know that the NASDAQ is already in correction territory. Well, it's going to be further into correction territory.
It's not coming out of correction territory.
Now, it's not coming out today. Not after Netflix is dragging the entire market down. Netflix down almost 20%
Hmm.
on. Now they're making money. They hit forecasts on revenues and profits, but subscribers. I mean, it's also not a pretty picture.
Well, people are working.
So
People are back to
and
work.
and we're seeing that, and that's actually kind of causing that's part of the reason we're seeing a general risk off scenario with equities all looking lower. And then if you want to talk risk off, we're gonna have to throw it out there because everyone's going to be talking about it, is cryptocurrencies. um, Bitcoin down closer to 38,000, 39,000, so it's below 39,000. You're seeing Ethereum getting hammered, absolutely hammered. It's across the board, and there's a reason for that. It's not just a risk off, but it's also the Fed starting to talk, and I'll let Brian talk about that. But it's something we have said uh, regularly about, eventually the US will follow China on a digital currency. That's not to say that all these other technologies and coins, it's just going to cause turmoil in the market. All right, with that, oh, you know what? There's one other thing I wanted to mention before I flip it over to you, Brian. Just because it is Friday, and I want to remind everyone that next week we do have our boot camp on Tuesday. If you haven't registered for it, please register for it. It will allow you access to the recordings if you cannot join. But please register, share it with your friends, post it on social media, let everyone know you're going, at least that it's happening. And hopefully we can get, we've
I'm
got a
discussing
pretty good,
3 strategies. I'm giving out 3 strategies on Tuesday. It's very
there you
rare that I
have
give that
it.
many, but there are 3. I will be mentioning 3 different strategies on Tuesday.
And I'm going to be doing some basics on, if Brian and I do charts every day. If you're looking to get some more basics and fundamentals, or someone's looking to get into trading and you're brand new, understanding some of those basics of technical analysis certainly could help. All right, so let's get into it today. We got the pound, we got equities, particularly the Nasdaq with Netflix drawing us lower, and then we have to talk about the cryptos. We just have to, because everyone else is going
It's
to be talking about
it's
it.
not only hot, it's super hot.
Yeah.
So, all right, here we go. So, you guys know that I love using this gauge of 24-hour pip change. You can see right now, everything is more or less flat. We've seen dollar strength across the board. And again, it makes sense why that. We'll explain that in a second, where the dollar strength is coming from. But the pound is getting blasted. The expectation was that the retail sales was going to be down 0.6. It came down at minus 3.7. That is an enormous miss to the downside. I mean, you see what misses typically look like. Maybe like 1 percentage point in the other direction. This is big. This is one of the biggest ones I've seen probably in the last year as far as major economies go. And remember, they have already raised interest rates. A lot of things going on in the UK. They're getting rid of their mask, the mask mandates. They're getting rid of passports. They're kind of one of the first countries that are like, nope, no longer pandemic. We're going to endemic. And now I believe Spain's in the same route as well. They're like, no, we want it removed. It's not, it's here, and it's going to be. It just seems like that's the message we're hearing. So
Yep.
UK is not doing well today. And again, what's interesting about this, um, you would think that as of 2 o'clock this morning, this thing dropped like 100 and something pips. The reality is it didn't. It actually started yesterday afternoon at about 2 p.m. I'm going to flip it over to chart and we'll kind of switch back and forth. But here's the chart that we've been sharing with you guys all week. We talked about, we had that really big push down on the 18th. We talked about a level of basing, a little bit of confirmation. And remember, I will throw fib charts out there. I like to kind of see what other people are looking at. And again, fibs are, in my eyes, somewhat of a kind of self-fulfilling prophecy. One of the things that we talk about all the time is again, Fibonacci in itself is not supposed to be a standalone system. It's supposed to be a complement, kind of a confirmation with other systems. I'm a supply and demand guy. I got supply right here, and it just happened to be that it was right at the 50% retracement
50%.
level. We've been
Hey, we got
mentioning
two
this
of them
since
lining up.
Tuesday, and you can see that yesterday at 10:30 in the morning, and you guys know what 10:30 is. We talk about reversals coming in at 10:30 all the time. I mentioned it yesterday that 10:30 was going to be a popular reversal. Did
Yep.
it the day before. 10:30, not only did it hit our area of supply at 136.59, it also hit the 50% retracement level. So a lot of this drop in the pound started yesterday at 10:30 in the morning. The news that came in happened here. Here's the 2 o'clock window. It only dropped about 30 pips. So although it is down absolutely huge amounts in the last 24 hours, a lot of it was already occurring from yesterday's session. So it kind of goes back like, well, how did they know that they were that bad? Don't know. Don't care.
Yeah.
It kind of comes up from one of those things that, a lot of times you have to focus on the fundamentals. And, if this was at a really, really high peak and you got that, you would see it drop much farther down. But the reality was, price was smacking up to a zone that we had talked about. We had confirmed buyers there before, dropped literally in there and did nothing. 30 pips on a number that big of a miss on one of the top 3 news releases that moved the market. It just goes to show you at the end of the day that it's the buyers and sellers that are controlling the market. It's not really the news. The news is just a catalyst to get it where it was going. It was already going there. It already moved 70 pips to the downside.
Yeah.
And then that last 30 came in from the absolutely worst numbers they've seen all year. And now it's starting to rally back up again. So again, this is why you need to have multiple confirmations in kind of what you're trading out there. Could you say, "Oh, I just hit the 50. I didn't need this other thing"? No, but then you would have had to trade the 23s, right, and you would have gotten shot back and forth. So again, remember, it's finding the highest quality trades. I think today this probably levels back out again. Although retail sales is bad, remember retail sales is what's happened in the past. It's more about what's going forward.
And it's been
Remember, they've already raised
market.
interest rates. They know that inflation is going crazy. There's some news over here talking about addressing inflation expectations is the first offense in monetary policy. So again, all the major hot buttons are still there. And again, there's comments coming in right now about on returning inflation back to its target and the things that we need to do. And remember, one of the other articles we saw yesterday was actually not about the UK, but about the ECB. There was an article about how last November is where they've gotten rid of the transitory, that they're all admitting it's there. And we knew at the end of the year that they were going to make all those changes December timeframe, that was it. They were reversing. Now they're also looking at, aggressively tackling inflation. So, the UK has already taken that first step. I see them probably having to take a second step just to, fully control it. But again, that's why we're seeing so much movement in the pound today. And again, I would say reversals are probably more under order, particularly because we have a strong dollar right now. Again, when you see a strong dollar in the European session, a lot of times then you kind of get the weak dollar in the U.S. session as the profit taking comes in the overnight, which again benefits this. It's a big push. It's a large push to the downside. And really looking across the board, you can see that strong dollar here again, fighting the euro a little bit, but strong dollar. Little weak dollar versus the yen, but the yen is a different animal. The Swiss obviously makes sense there. CAD were strong. Again, driving gold prices back down again. So we're seeing it. I look for the reversal today, and again, probably a pull back up into the 136 to 136.20-ish range in preparation for the weekend. Now, it is Friday. Don't forget, we got to look for these, the new positions. And I would say, we do have a new bottom here, but this could be an area where if we kind of meander around and end up in this 135.85-ish area, if we gap lower, that's a sign that we go long next week, early on. So remember, Sunday night we can start trading those longer duration, not just the daily contracts. We can start trading the longer duration ones, and that could be a great buying opportunity next week.
Yep. All right, so let's jump over and take a look at that Nasdaq. I mean, with Netflix, and I'm actually just getting a quick quote on Netflix right now.
Yep.
I want to see what it's actually. It's down fully 20%, over $100, and that's certainly going to be pulling the Nasdaq lower.
Yeah, and again, for me, the story is always the VIX. You can see that the VIX is up 4.85%. The market's not open today. A lot of that VIX increasing actually kicked in yesterday at 2 p.m. in the afternoon, though. So a lot of it you can see in the overnight. It's like, oh, what happened in the overnight? A lot of it started yesterday afternoon. And that's really when it started, and it's maintaining that high up there. Netflix's data didn't come out until yesterday after market hours, right? This whole drop, and again, we talked about how it's bouncing, came right up and grabbed that. We were looking for a little higher, but Nasdaq, again, probably not going to have the best day because those earnings, everybody hasn't had the opportunity to react to it yet. Now, I would say one of the things that's important to keep in mind here, too, when we talk about risk on, risk off, if you think about why is it, I got an email about this the other day. Why is the NQ getting beat up so much versus everything else? Very simple answer. Which of the indices benefited the most from COVID? and people staying home and relying upon technology. It was the NQ. Now that people are going back to work and unemployment rates are going down to crazy levels and everything, people aren't sitting at home and binge watching Netflix anymore. So it makes sense. This is what we talk about, cycles in the market, and just like cycles of what's hot, what's not. I mean, look at Peloton. It was a flyer forever, and then it was like, people aren't riding bikes anymore. Boom. It's back to holding laundry. So everything goes up and down, and risk on, risk off is one of those things that is definitely what we're seeing in the market right now. And the way we know risk on, risk off is, again, we're seeing money coming out of the indices, which is considered the risk on, and even things like cryptocurrency, which is considered a risk play. They're all dropping right now. And one of the big drivers right now is this. Okay, we got this a few hours ago, and this is what's on the mind of every single person out there. The Federal Reserve officials next week are planning to basically tell us what's going to happen in March. Now, this was a panel. This is a group of economists that Bloomberg polled in the United States. They're predicting that on the 25th, January 25th and 26th next week, they're going to tell us 25 basis point is coming in. Although 2 or 3, it says 2 in here. They're looking for a surprise 50 basis hike. That's more than what most people think right now. But we've been kind of saying it the last 2-3 months that when we do raise, look for a double.
Yep.
It's now you're seeing in major polls done by Bloomberg, you're starting to see people talk about it. So now the seed is planted. They may say 25, we'll probably do 25, but we're gonna play it by ear. You start seeing the CPI higher, they may get their hand forced. This is also what the market is looking at. Oh God, we can raise it double. That could be really, really bad. So with the lack of any really, really great news, this is becoming the forefront of everything. Is it going to be 25? Is it going to be 50? And it's not even when are they going to raise or if they're going to raise. Everybody's convinced it's going to be the 45th. So the market right now is currently trying to price this in, which adds on to the teeter-totter of risk off. We're about to crush the markets. Now's the time. Start banking things and start looking how to hedge yourself in the other direction. So that's kind of the one kind of risk off play. The other one, and this is kind of, again, I just mentioned that we're seeing NQ down. We're seeing everything pretty much down across the board, although I do think there's going to be some buying opportunity this morning because there's no really inherently horrible data this morning. Looking at what's also hot and getting crushed, cryptos are down 4.6%.
People are going to be talking about it.
Down 6.8%. The reason why this is happening is not only because it's risk off, because again, if the dollar's interest rate is higher, you can make money holding $1 by it doing nothing. You can't do that with cryptos. It doesn't pay dividends, right? Now there's these headlines. Okay, the Fed kicks off the debate issuing its own digital currency. Oh, I don't know why I'm getting the ad up top, but you guys are able to see it right here. We've mentioned this. China basically outlawed it. They got rid of it. The United States became the new hub. Now the Fed is creating their own digital currency. Creating their own white papers for it.
Yeah.
Oh, they're doing it. I mean, Bernard has already said that we're doing it. We need to be a leader. China's ahead of us in this game, and other countries are already testing it as well.
Yep.
Once this comes in, and everybody's saying there needs to be regulation. Why does there need to be regulation? If you have any questions about that, go look at Dogecoin and how the way that it's manipulated back and forth by Elon. Right now, everybody's saying there's got to be regulation. Well, I'll tell you right now that the conversation is here, once they realize what can be done with it and why it needs to go that direction, it's going to be here. And again, why would you have a competing? There's no reason to have a competing foreign, crypto exchange. I mean, the technology is not going anywhere. Blockchain technology is here.
The technology is there. I mean, think about it. We're electronic as it is. I mean, who uses cash?
Yeah.
You do use cash, but very.
Yeah.
In a very limited way. I mean, everyone's gone electronic. To go digital to the end user, it would be nearly seamless. It's just the technology underlying it.
It's literally behind the scenes on the banking side of things, but it's going to go back to the actual regulation of everything. It's great to think that they're not going to regulate it, but I'll tell you right now, when China regulates it, it's going to give them an advantage. One of our biggest things now is, and it's funny, originally these were I don't want people to know where my money is. That's great. I mean, but
they know
the reality is they do know where it came from. Money's getting stolen. You can't recover it again. It's kind of.
They actually can, and they have.
Yeah, they have. They've shown that they have. So I mean, all the benefits that everybody thought, and it's great that you want to take down society, but at the end of the day, the average individual, we're not. And again, me included, I'm not equipped to run the entire Fed. I'm not. I love this stuff, but I'm not equipped to say when we should raise interest rates and not to go forward. I can tell you what my opinions are on it, but there's a lot of people that are involved in those decisions. So at the end of the day, I've been saying that eventually once the U.S. comes in there and has their own digital currency using this technology, they're going to outlaw accepting any type of payments because of the risk that they associate with it. So,
or
that's
the
why
other
you're
ones
seeing this.
There were the other ones simply they might phase out themselves because
Yeah,
people
over
will.
time, and here's the thing: in
Who's
any
to say
market,
which technology actually wins? I mean, each one of the
yeah,
blockchains has a pro and con. I mean, they're solving it. They're
mhm,
building the technology. Now, the
yeah,
U.S. coming in can certainly pick the best technology. I
yep.
mean, there's all sorts of things that can be done. So
Yeah, yeah. So it's an interesting realm, and like I said, I mean, at the end of the day, if a person wants Bitcoin, it is worth what somebody is willing to pay for it, just like any other asset in the world. If someone believes that Ethereum is worth way more than it is, and they want to purchase it where it currently is right now at 2804, that's what its value is because somebody is willing to pay for it. When people are no longer willing to pay for it, and they can outlaw it, they can say in the United States, we're not accepting it for payment transactions. That's fine. If someone still says it has value, it's just like a baseball card, a diamond, a gold bullion, whatever you want.
and the
If
coins
someone feels it has a value, then
themselves.
it does. You know?
And realize it's not just about the coin, it's
Mm-hmm.
the blockchain technology and the
Mm-hmm.
network that it's on and what people are using it for. There's always a
Yeah.
use case. And that's why, Bitcoin has one use case, but if all the Ethereum has
Mm-hmm.
a different one. Cardano has a
Yeah.
different one. There's a method to the madness, and then the
Yep.
U.S. is going to
Yeah.
come in with theirs, and
Yep.
it'll
And
be
as
how they
traders, guys,
handle
and
payment.
as traders, I would say this: as traders, is there opportunity over there? Yeah, absolutely. There's still opportunity to make money over there. I'm telling you, buy and hold it forever. No. Do I think people that are buying and holding it expecting it? I mean, we joked last year like, hey, it's not at 100. It's not at 100. No, I mean,
Yeah,
it's at 38 right now. So, I mean, it's great to talk. When people are like, it's the greatest investment, you should get in. It's like, oh yeah, I mean, if you got in when it was $2,000, great. But all these people screaming when it was at 68,000 to get in, it's down $30,000 now from where it was. So, is
yeah,
it a tradable asset? Absolutely. Could you have had ways to short it? Absolutely. Go make money if the opportunity's there, guys. Is what we're telling you.
yeah.
Go take advantage of it. And it's just like anything else out there. And that's why we do these broadcasts. Look what's hot and look how you can get into other things. I mean, the options market is great, but again, is this chart different than any other chart that we've looked at? I mean, every
It's a
single
chart.
chart is exactly the same. You trade them
I
all
love
exactly
your
the same way.
I
That's
love how
it.
you say chart as a chart is a chart.
Is a chart is a chart is a chart. Remember, if there are buyers and sellers, there's always going to be people that want it, people that don't want it. There's going to be unfilled orders. Trade them all the same way. But again, that's what's hot for the morning. I would say it's getting a little bit late. It's 9:03. I would say the last thing that I would look at natural gas. It's super super cold. Maryland now. It says the real feel outside is 6 degrees. We're like what? You know.
Yeah.
And natural gas is up 3% today. We've been telling you guys all week. As we start getting reports of it getting colder and colder and colder, another snowstorm, watch natural gas spike, and it's up 3% already, and oil up, point almost 1%, 0.9. So
So,
things are moving today,
yep.
even on a Friday.
All right. With that, by the way, I wanted to make sure that the disclaimer was clear that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this was an educational session. Please do not construe anything Brian or I said as a buy or sell recommendation. We do this for your education purposes. Uh, any questions for Nadex, please email us, customerservice@nadex.com. Our emails are up there if you'd like to reach out to us. We are accessible. We're here to help. And in the end, what did we talk about today? We had retail sales come in ugly in the UK. We're seeing quite a bit of movement in the pound. We looked at the pound dollar, but you'll see that pound uh, action in the other pairs as well. We're taking a look at what's going on in the equities. Risk off situation. Equities continuing to look like they're opening lower. NASDAQ leading us lower. A lot of that being driven by Netflix, down
Mhm.
20%, absolutely getting hammered. But that's going to help. It's a pretty big piece of the NASDAQ index, pulling the NASDAQ lower, pulling everything else a little bit lower. And then at the end, we did have to kind of point out risk off situation. We're seeing that in the cryptos. And that's actually being led by risk off and the U.S. starting to look
Yeah.
at
Fed raising, digital currencies, and risk off. It's kind of like the
it's a
holy
lot.
trinity right now. So
It's a lot. With that, Brian and I will be back on Monday morning. Thank you so much for joining us, everyone. We love having you here in the morning. If you got any things, please always feel free to chat. If there's topics that you'd like to have us discuss on any given day, we are paying attention to that. And Brian and I will catch you Monday. Good luck in the markets and stay warm. Thanks, everyone.